Hello, the Money Wizard here, and welcome to the fourth video that will demonstrate the power of the Money Wizard that can be downloaded onto your iPhone. For the fourth video in this series, we're going to look at how you can mathematically judge stock market selections. Choosing to buy stock requires you to understand and monitor the market and how it's behaving at any given time, a company and how strong it is to deliver its product or service to its market, an economy and how well it is supporting companies and, more importantly, its consumers. Any combination of negative treatment or measures of these three facets will have a negative effect on an investment. So, how can the Money Wizard help? As an investor, you will concentrate on either trend investing, for example, investing according to what the market is doing, or value investing, investing according to how the company is doing. As value is all about money, the Money Wizard will help most in the later. Terms like dividend yield, price-to-earnings ratio, and balance sheet growth are all very fine, but can you afford to invest in a stock that is risky? Let's see. If you invest $10,000 in a stock, is it the right thing to do? Firstly, let's start by looking at this investment and see what will happen. We can look at the rate of return and look at the low and high of the stock. If this was a risky stock, that could return 30% if a particular product wows the market, or crash by 40% if that product bombs. Go into the Money Wizard investment section and let's enter $10,000 as our fund. If we get a 30% return over 3 years, our stock is worth $21,970. We have doubled our money and more. Great! But a return of 30%, that's a risky stock. What if this stock was providing a dividend of 8% over the past few years and intends doing so? Will this outweigh the price risk? 8% for the first year is $800, and this should increase with inflation. So if we redo the last calculation, we can play with the return and see the effect of the dividend on the final value by entering $800 in the payment and 4% in escalation. We can now move our rate of return down until we get the $20,000 and then see what our level of risk reduction is. Well, it is 22%. Less risky, but still high. And then when all is said and done, don't forget to look at the economy that you're investing in and how that is behaving. Because sometimes the economy dictates no matter how good the stock is. Also, remember the wise saying, buy low, sell high. Do not be a sheep. So sometimes the market can fool you into investing in the good times with little return and then lead you to miss opportunities in the bad times. Most millionaires are made initially during recessions. Using the Money Wizard, you can always recalibrate your forecast when the future does not turn out as planned. But to do this, you must always leave plenty of room, liquidity, for staying in the game for a longer period than expected. Well, that's all for now. Check out our other Money Wizard help videos on YouTube to learn even more about financial calculations.